Shabby here. Hope everyone's doing outstanding. About 12:50 here, August 1st, 2024. Sorry about that, folks. Markets in turmoil edition. Just being a little sarcastic here. We've had some swings after post Fed meeting, so sometimes on the Thursday after the Fed meeting there'd be some repositioning. But today it seemed like everything was we were gonna kind of hold the gains, maybe chop around here into earnings from Amazon and Apple after the close. But then the ISM numbers came out at 10 o'clock, and I guess it threw a wrinkle in those plans. And there's been talk over the last couple of months, especially as the jobs report comes in weaker than expected, some of this data, which we've had the cooler than expected or inline inflation numbers. But then we also have some data that kind of points to a slowdown. And this recent ISM number came under 50. So, it's somewhat of a forward-looking number, right? So you won't see the slowdown in demand until the earnings come out, right? It means companies and folks are not buying as much stuff. Some factories don't have to produce it, so maybe they're sitting on large inventories. Whatever it's going to be, however it's going to be spun, but that R word is certainly it's been played around for a while, and I'm sure it's going to keep rearing its head, despite the fact we had a stronger than expected GDP read, which I always say the GDP number is backward looking, right? We're looking at the past 3 months. So when you get the GDP number, we're already 3 months past that. So, uh, we'll have to see how this all plays out. I I get nervous. The S&P, the SPY 544 and 541 were areas I didn't think we were going to get to again. And here it is less than a couple days later, and we're back under 544 just now. So, I've if you've been around trading for a long, long time, and I'm not saying this is a start of a big pull or what have you, but sometimes out of the money, inexpensive puts can more than offset some of the calls I'm holding. So that's kind of the playbook, or a little bit of some of the reason why. Well, first I get the hedges, and then today I got a couple more hedges than I'm typically accustomed to, because if there is some continuation or we start breaking, we're 544 in a SPY now, we break 541. I mean, things could get interesting. So don't want to be a spot where I'm caught with my pants down. So I went and got some puts. So Broadcom, which I already did those puts on Monday. When did I get? I'm losing, not losing my marbles, but yeah. So I had the 138s, and then I was able to close those for some nice profits, and we bounced. And then I went and got them again today, and I'm tough one. So you look at the chart, and actually I have the IWM here, but let me just talk about that really quick. This bull flag, which I've been talking about on IWM, it's almost negated. But take a look at this candle on the bull flag. It just it looks like, I don't know. So hopefully we hold ground here at some point. We can reverse. I mean, it's not a crazy news in regards to ISM, and some folks like to say you need to see a couple months of data to support things, but the market's a very good forward-looking mechanism. So is the market's going to start pricing in a serious slowdown in the coming months? I guess that's the worry. So I got those Broadcom puts, which I don't have the chart up here. I'm going to put up right now. Uh, Already locked most of them in for 100% and 200%. Let's see, why is this not updating? Here we go. It went back over the 50-day moving average yesterday, and then what does it do today? Goes back under the 50-day moving average. Does it go? Does it continue? Is there continuation? Does it go under 145? I don't know, but I'll just hold the last couple of those. I also went and got some ServiceNow puts. If you look at ServiceNow, had that huge move last week on the earnings, all-time highs, reversal here today, and then you look at the premiums, and it's a $17 implied move on the puts. Well, the calls are puts, so a $17 implied move. So a 2% implied move on ServiceNow. If the market doesn't find footing today, ServiceNow, which was green just a little bit ago, now it's slightly in the red. If it closes down 2%, the puts are going to be serious multi-baggers. So I went and got some 800 strikes. I'll look to close some to cover some costs soon and ride the rest. But sometimes it's like I feel the market plays games with you, right? Because I look at the premiums, so wow, these are inexpensive, and maybe they're inexpensive for a reason, right? I remember years past, I used to look at some of the a put or call position on a stock and think it's inexpensive, and then not realize there's a dividend, ex divi date the next day or the day after, and you learn after a while that sometimes the market, it knows, right? And there's a reason why the premiums are inexpensive. ServiceNow, after its earnings, is typically not the most liquid name in regards to its moves in the option market, so that could be some of it. But I went and got some of those, and then I got some Palo Alto inexpensive puts. And you look, it's down at its 50-day moving average, which was 321.11. Uh, Again, I'm not saying um, inexpensive, but I mean the 300 puts it's $16. So I mean we have to move 5% to get into money, a little more than 5%, but it doesn't even have to move that much for the puts to get into money. So I got some inexpensive speculative lotto puts, and these are more hedges. So if these pay off, if the market really tumbles, of course, a lot of the positions I'm in, which are already some of them taking a hurting today, if this sell-off continues, those will more than offset it. I'm not going to talk about the other names. I'll be back on audio in about an hour or so. I mean, a Fiverr. I don't know if Upwork or Etsy's earnings hurt, or it's because of Upwork, but that one's taken on a chin. Should have had the September strikes. I had the 30s were up nearly 100% yesterday. I should have locked those in, but hindsight is 2020. Um, Square and Roku after the close, which unfortunately those are pulling back. So I'm going to need some big moves, not only just to offset the loss from today, but to make up for when I entered. But that's that, folks. But the way to kind of mitigate pain on these days, it's you can see the chat room. When the market's rough, there's not a lot of conversation because a lot of times we're mostly call biased, right? Which is fine, because if you look, the majority of the time the market goes up, right? If you're you look at the market over the last 12 years or what have you, that it goes up. So if you're looking to lose money, getting puts every week would not be a winning strategy, right? But more times than not, getting calls will be. So when we do fall, and a lot of times we tend to fall quicker than we go up on certain days. You can certainly make some decent coin on the put side. And look, now is at 811 now. It goes another 2% here. You're looking at 60. It'll be 795, and the 800 puts are going to be $10, right? So similar with Palo Alto, it's 315 now. It's right at lows. Little move there in the premiums. And then I always talk about this too in downward markets. If you have puts, it's like a double whammy. Volatility goes up, so the premiums go up, and then the stock goes down too, so the premiums go up. So it's like you're. I'm not saying it's good to be a bear, but sometimes if you're in puts and the market does go your direction, it's the puts gain premium a heck of a lot quicker than they do on the call side. All right, that's my little quick rant. Markets in turmoil. I'm sure if we close at lows today, CNBC will use this as a great reason to do their markets in turmoil uh, piece, which they always tend to do, and that typically marks a bottom. But we'll see. And then after the close, we have Amazon and Apple. I'll be back later. Let's have a great day, folks. We have about 3 hours to the close. Rock and roll.